Given the terrible events recent in India in the last day, I'd like to begin by not only expressing condolences from the United States, from my colleagues at Hudson, from I think all Americans that I know over the tragic deaths and the terrible viciousness of terror, which we of course both have experienced all too much of. I'd like to start with just a moment of silence in honor of the families of the people who lost their lives, and in sympathy for the people of India at this time. Okay, thank you. I'm John Walters. I'm President and CEO of Hudson Institute. It's my honor here to introduce a program that is, I think, one of the most important topics in the world we face today. That is a relationship between India and the United States, and between the economic relationship between India and the United States, because at Hudson we work on strategic power. Strategic power comes from economic power and comes from human beings. And India is one of the few countries in the world that is a rising power, and it's a rising power because of what it's doing with its people and what it's done with its economy. We need to do a better job of our alliance with India, which has been troubled in the past, but has been, I think, moving rapidly in the right direction. The ambassador is here, who's been a great friend of ours and a great asset to India and the United States. I want to thank you, Ambassador, for being here. The finance minister was going to be with us, but because of the terror event, she has been called by Prime Minister Modi back, as all cabinet members have, to deal with the situation and its grave repercussions. So we are honored to have with us today the Finance Secretary, Ajay Seth, who is, I think, as in all the nations that have actual professional foreign service and civil service people, more than qualified. His background includes not only work with public administration. He was Secretary of the Department of Economic Affairs before assuming his current role. He received the Prime Minister's Award for Excellence in Public Administration in 2013. And he has continued to be a key figure in the making of economic policy, which has been such an enormous success, I think, in India. We all are envious of the progress and the growth that India has had. May it continue. As I said at the outset, one of the reasons that Hudson has become much more involved, and Walter Russell Mead, who will be the interlocutor for the Secretary, has led our relationship and expanded relationship with India, is because the dimensions of that relationship have been expanding rapidly, but also there is a need to understand India. I think the United States makes a mistake of thinking that if we want to have an ally, all the allies are either going to be like European allies or going to be like Asian allies. And although I'm not an expert, even I can see that that's not going to be the case. India is both a complex nation, but also a powerful nation, a nation that is undergoing great changes, and a nation that is forging its own institutions and developing those in the pathway to become a great economic and military power, I believe. That requires us to learn about how that works. And I don't think that's easy unless we have the ability to talk to each other and to work together on specific issues and problems, security problems, but economic problems, as I said, are at the root of whether we're going to have a prosperous world, a safe world, a world where freedom can survive, or whether we're going to have continued conflict. To hold back that conflict, we need to have stronger institutions, stronger relationships between the United States and the allies of the world, the democracies of the world. And India is, of course, the largest democracy in the world. I'm going to turn the floor over to our two speakers so that I don't consume more of their time. Walter Russell Mead, as most of you know, is the Ravenel B. Curry III Distinguished Fellow at Hudson. He also, you read him weekly in the Wall Street Journal, the Global View columnist. He teaches at Florida University now, and has continued to be the kind of global strategy, wise man, as well as a teacher, which I think too many cases we don't do enough about the next generation. So we couldn't have a better person who's been working with Hudson's work in India, and we could not be more grateful to have the secretary here to talk about his discussions with U.S. and the future of his country at this time. It's a critical time. So I'm going to turn it over to the minister and to Walter.
It's great to be here today, and that we have such a substantial audience at a time of when so much is going on in Washington, I think speaks well to the increasing importance of U.S.-India relations. I know at Hudson, we were a little taken aback when we were first invited to participate in this program. We have, I think, something like 9 European finance ministers coming to Hudson later today for another event. So we're a bit stretched, and if there are any problems, please blame it on the Europeans. It really is, as usual, all their fault. And I'm also, before we begin, I just want to recognize the 2 colleagues who really, I think, are bringing immense value to our work on U.S.-India relations. I see Dr. Aparna Pandey is here. She has been my tutor on India for many years. I continue to learn from Aparna. And we also welcome this morning our latest addition to our India crew, Bill Drexel, who's joining us as a fellow, and coming from Center for New American Security, where he worked on AI. And he is lived in India, knows India as well as most Americans, better than most Americans could possibly imagine, and will be a great addition to our team. So we hope this meeting is one of a series of intensified contacts and relations, because at Hudson, India really is a priority. So thank you, Ms. Secretary, for being willing to fill in on such short notice with these tragic events. But my experience all over the world has often been that the secretary knows more than the minister sometimes, although they would never say that, So I think we're getting a real treat at a chance to hear from someone who's been very much involved. Well, 2047 is going to be a big date for India. It's the 100 will be the centennial of Indian independence. The sort of I like to tell people, the most widely celebrated holiday in the world is British Leaving Day. And in America, we celebrate that on July 4th. In India, it comes in August. But the holidays are very similar, and the spirit behind them is very similar. But by your centennial of independence in 2047, Prime Minister Modi says he wants India to be a developed nation. What does that look like? And what are the main lines of effort that India is pursuing to achieve this ambitious goal?
Thank you, Mr. Walter. But before I start or try to respond, it is an absolute pleasure and privilege to be at this event hosted by Hudson Institute. And thank you, Mr. John, the president of the Institute, and thanks for the nice words. And it is a pleasure to be interacting and sharing some thoughts where Indian economy is going and what does it mean for all of us. Come to specific of your question, that where does India see at 2047? Today's India is a highly aspirational society. And the youth today is ready to work for that aspiration. And what the leadership of Prime Minister Modi is providing the right kind of policies, right kind of hope, getting the structures right, so that the people can work for their aspirations and realize their dream. And he's driving almost all of us, not just people in the government. And Mr. Walter, I would like to correct on this aspect, that our minister knows all bureaucracy in finance ministry more than that. So this, on that count, is a real admission that there's no way I can say that I know on that part, and absolute clarity in terms of the policy guidelines. Coming back to your question, where does India see itself in 2047? Of course, it's a developed country, but from the prism of common people. wherein people are unable to realize their dreams, so that for that there are opportunities for all. And of course, a long and healthy life. In terms of statistics, we can say that what should be the per capita income, what should be the infrastructure level, but one aspect is very clear: there's opportunities for all, nobody is left behind. That is what 1.4 billion. We can't reach a developed country status without everybody being in a position, getting the right kind of endowments, getting the right kind of skills to reach that aspiration levels. I'll stop here.
All right. Some of the countries that may have already reached that status, such as the so-called Asian tigers, did so by focusing on exporting manufactured consumer goods to developed markets, primarily in the West. Actually, in American history, we have an example of that our South, the poorest and least developed region of the United States for many years, developed by being a low-wage manufacturer shipping things to the North. So this is we Americans understand this and its importance. But now we have a lot of countries, including the United States, that want to increase domestic manufacturing. We hear words like reshoring, words like tariffs. Does the global South need a new development strategy? And how is India thinking about this general question of the importance of exports and yet the potential constraints on that growth model?
I'll attempt to answer to your question first from my understanding of Indian economy and then try to generalize it for what it means for developed economies in general. First, this economic model of growing by exporting with or without significant domestic consumption, that economic model is no longer valid in 21st century. Be it for advanced economies or for economies which are yet to reach that status. Any economy which is trying to export its way while keeping its domestic consumption will create imbalance for the global economy. It will not work. Similar manner, any economy which is trying to feed its domestic consumption by importing and financing those imports through borrowings over a long period of time, that economic model also is not sustainable. Exports will remain. Countries will interact with each other in terms of trade, investment, but a long-term persistent imbalance on either of these two legs happening will create problem for that country. It will create problem if that country happens to be large enough. It will create problem for the rest of the world. Coming to Indian context, where we are today. Today, roughly about 55% of Indian population is in rural area. Agriculture, and say about those dependent on agriculture, is about 40%. And agriculture today constitutes about 17% of GDP, growing at 3%. Manufacturing grows at 6%, services grows at 9%. In India, this orderly transition from agriculture to non-agriculture is an absolute imperative. People migrating as a nation can be moved from agriculture to services directly. To a limited extent, yes. Better paying jobs and services will come with high skills, and people in agriculture can't really transition straight away for high-end services. They can get into a low-end services, but those are not the better paying jobs. Manufacturing has to be an integral part of Indian journey towards 2047. And that journey, our Prime Minister talks about make for India, make for the world. First of all, 1.4 billion people can't meet its consumption demands by importing things. First, it has to be a fair amount of our manufacturing has to be for Indian economy itself. Plus, some of course will be in exporting where we have the comparative advantage. So in terms of where we are seeing it now moving over to other developing economies, we say several smaller economies having an adverse trade balance, not having enough surpluses on the services side, and borrowing in the name of projects, infrastructure projects, but which are basically a domestic consumption projects, civil projects. These are not imports of plant and machinery which has to come in. So practically what they are doing it is financing their current consumption through borrowings. It is not a trade finance, it is an infrastructure finance for local civil works. And that is causing the debt stress, a large number of countries which are getting high into a debt unsustainability. So when you talk about Global South, this is a new strategy which is needed, that countries have to move towards finding their bearing on what they are good at doing it, but fair amount of self-reliance has to come. Doesn't mean that external trade will not happen, but it cannot be only external trade and moving forward on there. I'll stop here.
That's interesting. If I can follow up, that would appear to be a sort of structural advantage for democracies in the next phase of development, in that the old strategy of suppressing domestic demand for an export-led surplus was one that's easier for an authoritarian government. I could say China, but why should we go there? But to impose on a population, while a democracy has a much more difficult time sort of trying to impose large sacrifices on large numbers of people. Does this suggest that we might be in an era when democracy and development would go together?
See, coming from a country with 1.4 billion people, my entire life being a beneficiary of a democracy, I don't see any other viable means of a governance model. And what works, and again coming from Indian example, these are the right kind of economic incentives or disincentives which work. And they have to be transparent, objective. No amount of diktat or saying do this, do that will not work. It is an incentive which works with the people. Just to give an example, Indian society, a large part of economy, continued to be for a long period as an informal economy. Present government, about 10 years back, embarked on getting accounts for everybody, bank accounts for everybody. Now, just having a bank account and inculcating that habit of savings and then using money through a bank account rather than keeping cash in one's pocket, that itself leads to a more behavior which is more long-term. Should I spend money or should not I spend money? That kind of a behavior. So just a incentive of getting a bank account, and India has done some, just in about 7-8 years, about 540 million accounts have got opened, and the people are using those accounts.
Mm-hmm.
Yeah.
No, I think it's a very good example of financial democratization in a politically democratic context. The spring meetings of the multilateral banks are one of the major financial events of every year. And I think we can say that in this particular year, everyone is maybe even more interested in the economy than usual, and bankers and financiers, multilateral institutions have more to think about than usual. So what is on India's to-do list as India approaches this series of meetings?
Or rather, we have a long list. Let me mention a few. I'll step back by 2 years when India had the G20 presidency and worked very actively with the member countries that where the multilateral development banks as a system, as an institution should move forward. And I'll come to the fund in a moment. We are glad that India could persuade the member countries to agree on an agenda of bigger, better, and more effective MTBs. Of course, that an expert committee, or rather put together by Finance Minister from India, had gone a step beyond. They've said bigger, better, and bolder. But collective membership said bolder perhaps for another day, but at least a better, bigger, better, and more effective MDBs. What does that mean? And that is what the agenda, and we have been putting it together. Public monies are limited. what the taxpayers' money can be put into these institutions. But what these institutions have done for the past 80 years, I can say World Bank or the newer generation banks for the last 10, 15, 20 years or a couple of decades, is to leverage taxpayers' money from respective countries as they lend. And given their AAA status and governments providing the backstopping facility in terms of the capital, which can be drawn upon in the event of an eventuality, they can leverage a lot. But that's not sufficient. Second level of leverage has to happen when that lending reaches the balance sheet or the budgets of respective governments. That how does $1 become 2, if not more? And the third level of leverage happens when the monies are invested into a particular project, does private capital come in? Whether bank capital gets attracted? So our first aspiration that how to nudge MDB systems, including World Bank, to get into a direction of using its capital much better. Let a capital deliver a lot more. Second, is a better bank in terms of operational efficiencies, cost of lending. Today, India is at a crossroads vis-a-vis World Bank or other MDBs. That cost of financing by these banks is almost at par with what India can raise on its own. But it is a leverage which makes it much more efficient to do so. So getting into an area where the operational efficiencies move into that direction. And there is not that, is that work is happening or not happening? Is work is happening. Evolution agenda of World Bank, which was unveiled, I believe the last spring meeting, had made progress, and we are one good example. A typical project post to any MDB, including World Bank, normally takes about 18 months from project proposal to loan signing. Implementation is thereafter. But we had one project, is a greenfield, 50,000 acres of land, a new city to be done in the state of Andhra Pradesh. Project was posed in July end. By December end, board had approved it. So things are moving into those directions. So these are on the MDBs, that how do we take bank system towards bigger, better, and more effective banks. Coming to the fund, especially in the context of what is happening to the global economy, not just in the past couple of months, but I'll say last, at least for a decade, and I'm going back to the pre-pandemic itself, a large number of countries are financing their development by borrowing on behalf of next generation, through borrowings. And that is leading to unsustainability at the macroeconomic level. So the fund's role as a surveillance agency, providing right kind of a policy advice, and more so, instead of being reactive, a country is in problem, will suggest something, give them some lending, that's not the one. Putting systems in place so that the problem doesn't arise. I'll mention a specific aspect. Almost every decade, we had one program or the other of debt sustainability. There used to be about 20 years back a program called DSSSI. Now we are talking about a common framework. But what is a program to say there is more transparency in borrowings by countries so that there is a better set of information available? Debt stress is not allowed to build to such a level where a debt resolution has to be given. Now that is a role we see it for the fund to move into that direction. Thank you.
Many would argue that the IMF and the World Bank, which were created by Europe and the US back when they were the primary drivers of the world economy, need some updating to reflect the rise of Asia and perhaps also Europe's relative decline. What, if any, changes should be made, and how would you like to see those changes happen? I suppose I should add to this that when External Affairs Minister Jaishankar spoke with us at Hudson about a year ago, he talked about India not as a revisionist power, but as a reformist power on the world stage. And I thought that distinction is a really interesting one. And I wonder if you would have any thoughts related to that and the multilateral development banks.
Something on a similar lines, but my approach to this, which I find is what you mentioned it, that Honorable External Affairs Minister mentioned, is aligned fully with that. But in my own words, I don't see in terms of from the lens of certain economies doing well, certain economies growing, or certain economies not or changing or losing their positions, preeminence position. That's not the challenge or today, or we should be seeing multilateral institutions from that prism. Because that prism leads to an issue of voice. Who has got the voice in the bank and who is deciding the matter? Is that the real issue? India has believed, and I've used that for that the phrase, the word is a family, and we use it here in a word in Sanskrit or in Hindi, Vasudhaiv Kutumbakam. Do we have that wisdom that irrespective of big or a small or a medium economy, we can think collectively? That's why anyway, these multilateral institutions have been created. Otherwise, the world would have been better off doing bilateral deals. But getting into multilateral institutions, what is far more important is the reforms that are the MDBs using the taxpayers' capital better, serving the economies, the needs of today, or they are still stuck with the 20th century prescription. Are they looking at today's challenges? Similar manner is the fund talking about the problem building up over in the coming decade and the decade thereafter, or it is looking at the debt problem of a country today. So for me, it is the reforms of the system, taking them, what is the need of member countries is far more important. And I have the confidence that the board of these institutions, by and large, and a large number of capitals to whom they represent, have that kind of engagement to work towards the reforms of these institutions.
All right, so you would see basically we're on a good trajectory here, and we just need to sort of keep moving in the current direction.
These institutions?
Yes.
A lot more needs to be done. Though as a developed economy, we would like a pace to be much faster, but it will not be correct to presume that geopolitics doesn't play on these boards. It does.
Yeah.
But unless we separate wise issue, which is related with the relative strength, vis-a-vis what is needed from the member countries, and we have to focus on the needs of the member countries, then reforms will be much easier.
Okay. The Trump administration's recent changes to American trade policy, and I suppose I should say recent ongoing and still not fully understood changes to American trade policy, have attracted a lot of attention both here and abroad. How are they affecting India?
This is a far more serious question than the previous ones. And, first, let me talk about the first order impact and where India's overall trade engagement with the rest of the world is and what it is with the USA. India's trade to GDP ratio is about 45%. Exports about 21%, imports about 23%. But US is the largest trading partner for India, with annual trade of about $210 billion. In the overall context, external trade, exports is an important piece of our growth story. But India's growth is largely driven by domestic consumption. Today, about 60% of GDP is through the consumption route. Just give an example, and there's 3 years is not sufficient to draw a conclusion for, say, 3 decades. But post-pandemic, and I'm leaving the pandemic year and thereafter, Indian economy grew at 8.2%. Of course, now there's a sign of that it will grow at about 6.5% in the current year. But contribution of exports to that growth, high growth, was 0.1%. So when we talk about a macro level first order impact on India's growth story, maybe couple of 0.2 or 0.3%, maybe 0.5%, but not a huge impact coming up. But the second order would be important. Second order, if the global economy grows lesser, and yesterday, IMF came out with this assessment that global growth this year is expected to about 2.8 instead of 3.3. It does impact because it's a low tide position. Second, few sectors in the Indian economy will get impacted, and Government of India is engaged with those stakeholders, what it means for them, can any facilitation to be done. But taking it forward and how India is treating, that is what dealing with this situation. Our Prime Minister visited USA in February, met President Trump, and the two leaders resolved that by 2030, let's take our trade to $500 billion from 210, 2.5 times. To enable that, they said before fall of this year, let's mandate our teams to come out with a bilateral trade agreement. And fair amount of progress we have made. Our Commerce Minister visited in early March. Thereafter, end of March, Assistant USTR was in India for 3 or 4 days, had a discussion. Starting today, an Indian team is here to further the negotiations. We are hopeful of delivering on what the two leaders have done. So as far as bilateral relationship is concerned, both in terms of the trade, investment, and overall strategic partnership, is moving strongly. But it means implications for the rest of the world. We see it as an opportunity. Where we are getting into this, increasingly countries are realizing, with the exception of 1 or 2, which were exporting their way to progress, everybody is saying, hey, I have to first produce significantly for ourselves. It can't be that I can offshore manufacturing. So the rebalancing of external trade, especially on manufactured products, is something where India sees as an opportunity. Because that is our philosophy as well. While we export to others, but we produce enough for ourselves where we have the comparative advantage. In particular, the finance minister, and if she was here, she would have elaborated a lot more on what she did in the previous 2 budgets, last year and this year, to build resilience in our domestic drivers of growth. Thank you.
And so manufactured exports are an even smaller percentage of your total exports and total growth, I suppose. What is, in terms of India's exports to the US, how much is manufactured goods, how much is services?
So an overall $210 billion of trade between, that's goods and services both. At the moment, or the last year, the trade balance was in India's favor about $40 billion. Now, if you look at it in terms of services, my sense would be it's about $70, $80 billion. The rest would be around the goods side. Mm-hmm. That is the overall numbers are.
Yeah. And it's interesting that so far, at least the Trump administration seems much more concerned about a trade balance in manufactured goods than in services.
See, that there lies the one. Where does the most of the jobs come? As I mentioned at the beginning of our conversation, manufacturing services can get the high-end, better-paying job services can absorb, but the numbers is limited.
Exactly.
And we don't know where this AI will be taking us on that particular end.
Yes.
But manufacturing is something where the day is not yet near, where manufacturing requires human people to work. Robots can also do, but that is a rather limited one, maybe very precision one. So manufacturing leads to jobs, better-paying jobs. Economies after economies are looking towards that. That is really the one where the focus, and rightly the focus is on manufactured goods.
Yeah. And certainly in the Indian context, where if you speak English and have good mathematics qualifications, the high-end services are very open to you. But if you don't, if your English is less good and you don't have a good formal education, the path to the high-end services is largely closed. So there's a big political dimension, I would think, in India to promoting manufacturing.
See, it's a question of from functional literacy to high-end services is a quite bit of a leap. From one generation to make that jump is a difficult proposition.
Yep.
A literate person, give them skills, a factory worker, one can become. Or high-end services, it does happen, but not in large numbers on which we have to work on.
Yep. Let's shift to geopolitics a little bit. Finance ministry is not primarily concerned with geopolitics, but these days all of us are paying some attention to it. And with tensions along the India-China border easing recently, how do you see economic relations between the two largest Asian economies evolving in the future?
So Walter, this is not really my area, but let me attempt my understanding on that particular one. Relationship between India and another neighbor have seen their own ups and downs. And year 2000 was certainly a period of down. But in the last few months, there has been an engagement or an agreement towards disengaging on our borders, which I believe through the channels of diplomacy and other channels is moving in the right direction. But I can talk more about the economy or the economic relationship. We do have a huge trade deficit of $100 billion vis-a-vis China. That kind of imbalance is unsustainable, even on a bilateral basis. So there has to be a better reset. There are few challenges for us in terms of the current rebalancing which is happening. So at this point of time, we'll have to wait and watch that where the position is going to be.
Mm-hmm. Are there particular sectors where you could see a potential for increased cooperation?
The current level of engagement of the relationship perhaps is not at a stage wherein we have to look at what can be the possible areas of cooperation. But the one point is very clear, that it has to be a rule-based, market-based engagement. We take into account each country's sensibilities as well as the security concerns. We are at that stage.
Let's see. I hear that India's Aadhaar digital identity system is transforming, we talked about this a little earlier, everything from social services to retail transactions. And you hear about beggars and vendors on the street being able to use with a QR code to get paid and so on. How did that happen? How did you pull that off and make it happen? In the United States, we certainly can't get a national identity card, or I think having some sort of national digital identity would I don't know how we would get that through here.
Aadhaar, or the digital identity, is part of a larger stack, which is a 3-layer. And we call it as a digital public infrastructure. An infrastructure, digital infrastructure, which is put together and regulated by the government in terms of open access. But entire innovation layer comes from the private sector. So the first layer is the identity layer. Today, 1.4 billion people, everybody has a digital identity. Even a newborn child, we're almost to a situation where the child and the mother, before leaving the hospital, child is given an Aadhaar number, and so-and-so's child with the photograph. Of course, that by that time, biometric would not have matured enough. So at the age of 5, those biometrics have to be captured, because that helps in taking care of the nutrition and the health needs of the child. So getting the unique identity, where does it help? Why it has succeeded? It is voluntary. data to be required is minimal. Name, age, address, and gender. That's it. No other data. What does it do? It only gives yes and no. Like my Aadhaar number, I have to my service provider, I have to say, check my identity. Only then that my service provider can check my identity. And that identity, the Aadhaar only tells yes and no. It doesn't say anything else. So data privacy is very high standard of data privacy is maintained and followed there. Second piece of the second layer is a payment layer, which is a UPI. That payment layer, and just stepping back, today 90 million authentications happen every day on Aadhaar. On UPI, number of transactions every day are 550 million. That means 1 in every 2 adult Indian does an Aadhaar in a day. Transaction value is about $9 billion a day. That's a kind of a revolution or a transformation it has created. And you talked about retail people. Where does it lead to productivity gains apart from those opening those accounts, etc.? I'll just cite 2 examples. Today, grocery store, people go pick up their things from a shelf and wanting to do billing, the person does the billing. What the next stage would be taking out the cash and giving it. He will open his cash box, giving it back. But what this innovation private sector has brought in, a sound box. While one billing is over, the buyer is scanning the code and making the payment, the shopkeeper has moved on to doing the next billing. The moment those transactions are over, in about 20 seconds, a sound comes, received so many rupees. That person has heard while he's doing the billing for the next person. He saved that 20, 30 seconds. That leads to the productivity gains. Give another example, COVID period. Economies were struggling with how to provide support to those who required support. Because of the DPI, which the vision of the government had put together, we were ready at that point of time. Government of India could do direct benefit transfer to those who needed it. And they could transact because they could do it through an UPI. Third example, the people with enough savings wanted to get into a stock market. For them to get their KYC from their own town, from their own home, could get their KYC, open their demat accounts and start transacting. So this entire digital public infrastructure is based on for anyone, anytime, anywhere. KYC. If you and I have to buy any goods, first of all, we have to pay for it. UPI is there. In so many places, we have to establish our identity. Identity gets established through this mechanism. And third layer, and the most important, is a consent layer. Unless the owner of that identity gives that consent, things don't start.
And I guess that is a more efficient payment system than we have here using credit cards.
In terms of cost, credit cards in India charge about 1.8% on the transaction value. Debit cards charge about 0.9% of the transaction value. My sense would be the entire ecosystem cost has to be at least some 0.5 or 0.6%. What is the UPI cost? UPI cost is 0.05%. So that's the cost, meaning that at least a level of, if you compare with 1.8%, it is 0.05 is 1 of 1/20th. Now today, even the credit card is also available on UPI. One doesn't require a card, so we are now moving towards a cardless society, or the tending towards a cardless society.
I have to say my wallet hopes we achieve that here soon. India has made significant strides in the World Bank's in ease of doing business index over the years. But I know, certainly if you talk to business people who are working in India and so on, you hear that challenges remain, I would say, both for domestic and foreign business. This has got to be a top concern for the finance ministry. What are your priorities in addressing some of these issues?
First, we have done significant amount of work, but a lot more needs to be done. Just quickly, 2014, we were at some 140 plus in terms of ease of doing business. Came down to 63 by 2019. Then the World Bank stopped that index on certain reasons there. Similar manner in terms of the logistics improvement, etc., we have made improvement. But a lot more needs to be done. Where does the current set of priority of the work is going on is getting information overload on economic actors reduced to a minimum. If anybody has asked, any part of the government system has asked for information, no other system should ask for the same information. Take consent and pick it up from the original source. Mm-hmm. Otherwise, just the sheer asking for information becomes an overload. Second one, the compliance requirement. Take it towards a direction where it, for the low risk, make it as a self-certification or a third-party certification rather than a government official trying to do a certification. More market-based certifications to come in. Third element, decriminalize any violation as far as possible, except if it is against a public order. Otherwise, make them as more of a civil liability, meaning that impose maybe some penalty can be there, but not making it as a criminal offense or a court adjudicated offense, etc., get into those areas. So deregulation. And in this budget, Finance Minister has announced a high-level committee on non-financial sector deregulation. That is one initiative. How much time it takes to start a business. And again, this gets monitored that today goods and services tax, which is a one nation, one tax, right. Registration within 3 days. Now, question is being asked, why 3 days? Why can't be the same day? It used to take 3 months. Mm-hmm. So from 3 months, we have come down. 3 days is an aspiration, but beyond 14 days, it gets high up into the roof. Hey, what is happening? And so that's one, moving into reducing start the business, but a lot more work is needed.
And what are the sources of resistance to these kinds of changes and reforms? Because there does seem to be a lot of friction as people try to reduce the various obstacles. People talk about the license Raj being very resistant to reform.
So the part of the work is within the government, and where it has helped us in the first flush of using technology, using sort of e-governance as the word we use, processes within the government, make them more automated, more rule-based, more certainty in terms of time. Then the second level is market-facing interaction, and third is market-to-market, player-to-player. So India has done well in streamlining its internal processes. It has done well in business-to-business transactions, but when it comes to interaction of the common people or the businesses with the government, that layer, bring in the layer of certainty. And just give an example, some states which were not ready, states is a province in, just like here, in a federal country, they were not ready with their internal processes riding on IT systems. So they came out with a simple solution. They said, any application for any permission will come through a gateway, it will be responded through a gateway, but I promise and make a public promise that this services, I'll provide it X number of days. And if I'm unable to do so, I'll put it in a public domain against each officer. So till about 15 years back, when I was in that position, I used to get a DO letter, a demi-official letter. Hey, under your charge, these are the officers who have taken beyond 14 days. What is happening? And that is in the public domain. It's not that it is only was known to my superior. So getting a public commitment of delivering services in time is one of the strategies has worked, but there are a lot more to be done in those directions.
As you look ahead, what do you think is a sustainable growth rate for India going forward?
This is a crystal ball issue.
And I know all crystal balls are a little bit cloudy, but it would be interesting to hear what range of estimates do you have?
So India has grown, except for that COVID year, about 6.5. My own sense is India today has the potential to grow about 7. And when I say grow at 7, it is not for a year or two. Can we sustain 7% growth over next decade? Certainly. Can we sustain it over 2 decades? A lot more efforts will be needed. But that will not be sufficient for 2047, as you have mentioned. We have to take the potential growth rate of the economy to 7.5. If external conditions are good, if these are tailwinds, we'll get 7.5. If they are headwinds, perhaps 6.5 to 7, there's a range which will be delivering on. And again, very clear that domestic drivers, we have to strengthen them in spite of there being headwinds. We should grow at a number of 6.5 to 7%. Plus a play around productivity, which we feel is not just a question of investment, it's a question of productivity is going to play a major role for our economy.
Well, that's, I think, a very good and a very encouraging overview of a complex situation. It's been interesting to see from the U.S., I would say relations with India are probably one of the few areas where we have wide bipartisan agreements. We saw every administration, I think, really going back to maybe the final years, not perhaps the earlier middle years of the Clinton administration, but and certainly under Bush, Obama, Biden, Trump, we've seen sustained efforts to improve the relationship on both sides. I hope that's going to continue. I certainly welcome what I see in India as a equally deep and social consensus on the importance of this relationship. So we at Hudson will continue to increase our focus on India, our work with India, our attempt to learn from India and about India. And Minister Seth, I hope we have many more opportunities to host you and to engage with you. And thank you very much for being with us today.
Thank you, Mr. Walter. And as you mentioned it, that democracy and development going together, the two largest democracies, and having their development models, having their own strength, but so much of commonality. So I'm very highly hopeful about this relationship.
Well, thank
growing
you.
further. Thank you.
Thank you.
Pleasure.